Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin in the healthcare sector, which has been one of the strongest performers in the past month or two. While the biotech giant CSL took a hit to its share price after its results, elsewhere in the sector, Gary Glover from Novus Capital is seeing strength. Here he analyses the charts of Mesoblast and Ramsay Healthcare.
So we can see here that Ramsay has sort of broken that down channel. We've got a series of high lows here. We're getting sort of congestion underneath that $40 there. So just kind of some sort of positive, sort of constructive signs here for this for the stock here. So again, we might be rushing out here, but the fact that each pullback's getting shallower and shallower, and we're sort of tightening up under that sort of $40 level does leave it in a pretty positive position. So definitely the healthcare names are showing a bit of strength here at the moment. That's possibly a sector maybe that can hold up here or be positive even if the market does cool off.
All right, well, let's stay in the medical related field there with Mesoblast.
Yeah, like I mentioned Mesoblast earlier this year. I just think this is that was a bit of a game changer announcement there from Mesoblast there, and the fact that it's gone from a company that hasn't really made any money and has had to continually tap the market for money to suddenly now sort of getting its first FDA-approved product, and it had a really large revenue print sort of in its first 2 months of those sort of sales there. So I think this is game-changing moment potentially for this stock here. We've had a strong bounce in that stock here, but more importantly here, each time we've sort of pulled back here, we've pulled back in pretty light volume. So I think this stock looks pretty strong here. So the sector is holding up pretty well.
That's what we're seeing in the healthcare sector. Meanwhile, the material sector has been one of the worst performers this past year as commodity prices have weighed on revenue and profits. But more recently, there's been a rotation into resources stocks. Gary Glover analyses the biggest stock, BHP.
It's interesting here. As much as we think we might sort of see a bit of a cooling in the index, we have seen rotation throughout the market there in 2025. So as one sector gets a bit hot and cools off, we're seeing another sector sort of find some strength, and that's a healthy sign for the overall market. So although the market looks really extended here at the moment, the XJO has almost hit that 25% expansion point as well. We are seeing sectors sort of show strength and breaking out here. So interesting here that BHP has come through the bottom of that, sort of like 2-year channel here. So that's a good sign there for sort of some of the metals there. It's not going to go up in a straight line here. I'm sure there might be some tracking back here, but it's a positive sign there that it's actually broken that downward channel. But it does fall in line with the fact that we have seen sectors pop up here, and we are seeing the metals show some strength here at the moment, which is kind of positive for the overall market health.
For a broader look at the resources sector, Jonathan Takadina from MPC Markets identifies plenty of opportunity there, particularly among the junior miners, the explorers and developers. Here he explains the Lassonde Curve, a graphical representation that illustrates the value creation process in the mining industry and the different stages of a company's life cycle.
So this is something I wish I knew about back in the first bull market that I was participating in. But it's just a curve that shows how long it takes from a mine to go from actual discovery to making money. And so a lot of times people get excited by that first ramp up, because what happens is it's actually just two guys in a ute usually, and they go, I've got a tenement out in the back of Whoop Whoop. They start digging around and they find something, and then people get excited by that. And that's when you can get quite some big gains, like some big 10 baggers at that stage. Problem at that stage though is once they found something in the ground, it actually takes a very long time to actually then go from something in the ground to something that's actually valuable in terms of money. It takes, on average, like say a copper mine, 10 years to get off the ground. Some gold mines are quicker than that, but we're talking a lot of capital, a lot of time. And because the ASX has a memory of a goldfish, basically we always jump from the next hottest thing onto the next thing. Investors get impatient, and then they often sell out those big discoveries to then the more savvy investors who will put more capital in to actually make some money out of the actual whole venture.
And that's it for this week's edition of The Charts. To watch, join us for more technical talk next week. Happy trading.